In one of my recent videos, I talked about my story and how I went from a $0 to a $1 million net worth, and my source for that net worth was Trust Me Bro. But in today's video, I actually want to break down my portfolio and the update of my net worth as of winter of 2022. The internet has created a lot of skepticism for those people watching because there are so many people out there who are just plain lying. For example, those day traders who are renting Lamborghinis and luxury Airbnbs and saying those are their houses. So when I say I'm a millionaire at the age of 27, you might think that I'm lying. But hey, my name's Avery, I tell it like it is, I say what I'm going to do, and in today's video I'm going to go over my net worth, which means your assets minus your liabilities. And if you appreciate my transparency, I would appreciate it if you would scroll down and make that thumbs up button blue. As I mentioned in this video, I'm going to go over my net worth, which would be your assets. So think of things like cash, real estate, stocks, anything else that holds value, minus your liabilities, which would include any sort of type of debt. But with my assets, I'm not going to include things like a car or other depreciating assets that I don't really consider assets, mainly when we're talking about cash, stock, as well as real estate. And I'm going to go from the smallest amount of net worth and which category those go into to my largest holdings that I have in my portfolio. The smallest holdings that I have in my portfolio would be my brokerage account as well as my Roth IRA. A majority of my IRA and brokerage funds are located in Vanguard because it's a tried, true, and well-trusted platform where a lot of ETFs and index funds that I like to invest into were created. I also have some money in Moomoo, which I use that more as a fun account. And if you want to go ahead and get a bunch of free stocks with Moomoo, they always have a great stock promo going on. Go ahead, check out the link in the description below. If you put in over $1, you can get a ton of free stocks. It can vary between 5 and 15 depending on the amount of money that you're putting in, as well as the time of year that you're actually watching this video. So currently I have $20,500 in my brokerage, and that mainly comprises of VTI, VYM, as well as SCHD. So VTI is a total stock market US ETF, essentially just like the S&P 500. VYM is fairly similar, but it's a high dividend yield ETF. And so I pretty much invest into those two. Plus I have a little bit of SCHD, which is Schwab's version of VYM. So that's really all I have in my brokerage. I don't get too crazy or buy individual stocks. I just put about $300 or $400 every single month into that account. I invest into the same 3 funds. And if you remember one of my net worth update or portfolio update videos from, I think it was about a year ago, I actually had more money in there at the time. But earlier this year, I bought an Airbnb and I sold about $25,000 or $30,000 worth of stocks in order to actually fund some of those renovations as well as furniture. So that's where a lot of that money has gone. And then I've started slowly getting that back up and up. As far as my Roth IRA, I have $5,000 in there. It used to be closer to $6,500 or $7,000 with appreciation and gains, but I did some stupid things and decided to pick individual stocks because it was my IRA and I thought I could have all those gains that were tax-free. So I have money in individual stocks like Tesla, Meta, and then I also have money in the same funds like VTI and VYM. And I haven't put any more money into an IRA as of yet this year because I most likely can no longer contribute to a Roth IRA anymore because of the income that I earn. So I'm going to start putting it in a traditional account, but I want to talk with my accountant first before I make any contributions, which you can do so up until you actually file your tax return. So I'm okay doing my 2022 IRA in 2023. So that total for my brokerage as well as my IRA accounts comes to $25,500. Next, I'm going to talk about my work-related benefits, and by that I mean my 401k as well as my HSA. These are invested into stocks, but it's different than a brokerage or IRA account that I handle on my own. This is done through work and through a different provider than I use outside of work. So I have a job and I contribute 5% of my paycheck to my 401k, and that is pretty much because my company matches 5%. So automatically that's a 100% return. And that 401k was about $45,000 before I left my last job, but a lot of that money wasn't vested when I came to my new job, so I only was able to bring over about, I think it was $36,000, and there was maybe 3 months of being able to actually roll over that 401k and actually being eligible to participate in a 401k in my new company. So that money hasn't really grown, and it essentially went from that initial $37,000 and today it's about $40,000, mainly from contributions because the market has looked a lot like that and pretty wonky over the last few months. Other than my 401k, I also have a health savings account. Health savings accounts are awesome, and they're usually associated with a high deductible health plan. You're able to take money out of it and then utilize it for any health or medical expenses. But the great thing about your health savings account is that you can invest money. So the way my health savings account provider works is I have to keep at least $2,000 in there of actual cash, and then anything over that I can invest. My old one was actually only $1,000, but the new one is $2,000. So I have $2,000 in there of cash, and then another $4,000 that is invested for a total of $6,000. And a little off topic, but one awesome thing you can do with your HSA is, say you go today and have a $1,000 medical expense, instead of taking that out of your HSA, take it out of your own pocket if you can, and then leave that $1,000 invested, and then in 30 years, you can take out $1,000, and that $1,000 grew for 30 years. A little bit of delayed gratification there, but another awesome tool for your HSA. So far we have stock and brokerage equaling $25,500, and now work-related benefits with my 401k as well as my HSA at another $46,000. Next, I'm going to talk about cash, and I probably have a lot more bank accounts than the average person because I have different bank accounts for different things happening in my life. I have a personal bank account, I have a social media bank account, I also have a bank account for each of my properties. My personal checking account, I carry roughly $2,500 at a time. Every time I get paid, I will take a lot of that money and put it into a high yield savings account, but it roughly stays right around $2,500, let's say plus or minus 500. Next, I have my social media checking account, and this account is in a different bank, and it's essentially funds that I get from brand deals, from my course and mentorship, from anything else that I may sell, from YouTube views, all of that good stuff. And usually I keep not that much money in there, essentially enough to pay my editor, and right now there's about $2,000 in there. Next, I have another account for my very first property, my duplex, and this is where I hold a reserve. Essentially, these are funds that in case something goes wrong, like an emergency fund in your own life, I have some funds to be able to pay for the property. So for that property, I keep $6,500 as a reserve. Any dollar amount over that, I take as cash flow, and if there's an expense, I basically won't take cash flow until I'm back up at that reserve amount where I feel comfortable. As you could have guessed, for my second property, my triplex, I also have a $6,500 cash account, which is a separate bank account because it's much easier to keep those finances separate when it comes to accounting and doing expenses and all that stuff in real estate. I also have a bunch of security deposits for my tenants in separate bank accounts, but none of that could be used towards my net worth. I wouldn't count your security deposit that you have given me that I'm going to pay you back most likely as anything towards my net worth. So I have those funds, but definitely not going to include that in the cash amount. Next, I have my Airbnb. I'm still building the reserve on that one kind of slowly and still taking money from it as I'm going. But right now that account has about $4,000 in it. And I also have my high yield savings account. So anytime I get paid from my job, from any rental properties or any social media or any of that kind of stuff, other than my base expenses, I will put a majority of my funds in my high yield savings account. And right now, high yield savings account are pretty good. I personally use Marcus Goldman Sachs, and you can earn 3%, which isn't that bad, and it's guaranteed. And if you want to earn a little bit of extra yield, you can use my referral link. I'll get an extra % for 3 months, and so would you. So it would be a great way for you to earn more money and help me in the process. So that'd be awesome. And right now I have roughly $52,000 in there, which might sound like a lot of money, and why am I not investing it? And it's mainly because I'm always trying to stack cash and buy another property. I've offered on 3 properties, actually I think 4 properties now in the last few months, hopefully another one later today, and I'm trying to always offer on more and more properties, so I keep that money for down payment and other closing costs. That's my total cash holdings right now at $73,500. Next, I will talk about my Airbnb property. I bought this in April of 2022 or earlier this year for $405,000. I spent roughly $50,000 or $55,000 renovating the place. Took it from a place with a bunch of red carpet, really ugly, not that nice, and now it is a beautiful, immaculate property that people love staying at, and it has turned out to be a fantastic Airbnb. It is significantly nicer than my house and gave me crazy lifestyle inflation for the weekends that I was staying there. Now that I'm not staying there as much, I've come to appreciate my own house again. But that's really irrelevant to this story. This property, I currently owe a loan of $361,350, and the valuation is an estimated $525,000. Personally, this one, I have the estimated value based on comps and other properties in the area, as well as the fact that recently the town said that No new short-term rentals can be created in single-family neighborhoods. But the cool thing is, if I sold my short-term rental or Airbnb, that person could then use it as an Airbnb. In my opinion, because this is a limited supply and only certain houses can be Airbnbs, this should add to the value. I'm not adding that in here, but something that's very cool that may make it worth a lot more when I actually try to go sell it, if I ever do sell it. So with that valuation that's estimated, and usually I'm pretty conservative with these numbers, I try not to make it sound more inflated and cooler than I am, I would have roughly $163,650 of equity that would add to my net worth in my portfolio. Next would be my primary residence, where I'm sitting here right now, where I'm doing a live and flip strategy. It's a very cool house, very unique Durham place in North Carolina. Has some fun things, have done a lot of cool renovations, and currently I owe $315,200 on that loan, and then the value of the property is roughly $500,000. And again, that value is purely an estimate based on comps around me. There was a house that sold a couple months ago, basically the same square footage, same bedrooms and bathrooms, and it was 3 blocks away that sold for $525. Some have sold right around $500 and some just shy of $500. So I think it's a pretty good valuation to say roughly $500,000 for this property if I tried to go sell it. So with the difference between the estimated valuation and the loan amount, that would be a $184,800 equity that I have in this property that would add to my net worth. Next, I have my 3-family, which has been the second property that I bought, located in Massachusetts. I bought this for $678,000 back in March of 2020. Did a lot of renovations there as well. 2 of the units pretty much completely turned over. Good kitchen renovations, good bathroom renovations, really nice place. And this gets me pretty good cash flow right now, but purely we're talking about net worth. So right now on that loan, I owe $630,000, which is pretty cool how much principal pay down there is on this property every single month. Principal pay down is cool because not only are you going to be getting cash flow, but roughly $1,200 to $1,300 every single month for my mortgage payment goes to paying my loan down that other people are paying for me. One of the cool things about real estate. And this property on Zillow says it's worth roughly $905,000. I personally don't love the Zestimate, and I think a more true valuation of this property would be right around $875,000. And with that $875,000 valuation, that would mean that this property has $245,000 of equity that would add towards my net worth. Next would be my duplex in the first property that I ever bought. And I actually just got this property appraised because I was removing all of the PMI from the property. And now my mortgage is $100 less and I make even more cash flow. One of the other awesome things of real estate. And currently I owe $481,500 on this property, and the property ended up appraising for $800 grand. So that's very cool. I bought this property in March of 2019 and now I have $318,500 of equity. I definitely did a lot of work on this property, a lot myself, fixed up a lot of the major systems like the heating, hot water, did a new roof and electrical panels and some main plumbing lines. And so I put a decent amount of money into this property, but not nearly the amount of return that I've gotten on it. And this by far has been the best investment that I've made to this date. The next thing to talk about would be the 4-family that I bought a couple of months ago, and this was with private money. So this one's a little bit different, and I'm actually not gonna add it whatsoever to my net worth calculation. So it was bought at $549,000 with private money, actually all cash. And before I had bought that 4-family with the partner that I used, there was a 3-family that was a block away, same square footage, but actually a little bit less square footage and 1 less unit that sold for $635,000. So I feel very confident that we got in at a really great price. There was no appraisal because we didn't need one, buying in cash. And essentially with this property, we are going to fix it up. There are currently long-term tenants there right now, but fix it up as time goes on and then recoup all of the costs to the private lender, and then a portion of the equity that is above that, as well as a portion of the cash flow, will go towards me and go towards them. So I think it's a win-win in this scenario and an awesome thing. But again, I'm not adding it towards my net worth right now. Definitely later on down the road, it will be a really great additive to me, especially when we can get in, fix up the property, do a cash out refinance, and get the investor all their money back. So if you are paying attention, or you can do fantastic math in your head, which even though I was a math major, I definitely can't, that total net worth was $56,950, which is kind of crazy to think about. I talked about in that video when I went from 0 to 1 million, what it feels like being a millionaire right now. And it doesn't really feel any different. I think the biggest thing that has changed in my life obviously comes from cash flow, because you can have all these assets you want. If you're not actually bringing in money, then it's going to be hard to feel a certain way in your life about spending money. But the only thing that has really changed is I feel better about spending on food as well as on beer, and I'm a lot less stressed out about spending on necessities. Anyway, that is the total net worth update as of winter of 2022. If you guys appreciate that transparency, again, I would appreciate it if you would like the video, because it pushes it out to more people to show them that financial freedom and building wealth through real estate is highly possible. And if you like this video and you want to learn more about financial freedom and building your wealth through real estate, definitely hit that subscribe button or tap that notification bell. And if you like me here, you might also like me on Instagram as well as TikTok. You can check me out there too. So thanks again for watching, and more wealth is coming your way.